Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Thursday, February 15th, 5:21 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. Market state, we're in an uptrend since the O'Neill follow-through days on November 1st and 2nd. We've got the coveted green arrows showing, the coveted 4 green arrows showing on our trend gauge, meaning market leaders plentiful and acting well, and all 5 of the major indexes trading above their short-term 21-day moving average, medium-term 50-day moving average, long-term 200-day moving average, as small caps second close above the 21-day today, getting their the fly in the ointment taken off of the trend gauge. So what happened today? Not much more bulls could ask for as far as the 2 strong days after the big negative reaction to the Tuesday CPI sell-off, and today included strong breadth as mid caps and small caps rocked. XLK, the only one of the spider sectors that were down, which means rotation was taking place, which strengthens and broadens the rally. And not much more good I can say about it. Here are the final numbers. Big 7 down barely, just 0.11%. Tesla up 6.2%, back above the 200 level, trying to reclaim a spot back in the big 7. Not quite there yet, but we'll take a look at that chart. RG8s, our 8 growth ETF composite, after taking a big hit on Tuesday, 2 solid days, up 1.74% today. S&P 500 opened just barely positive, based for a while, trended higher in the afternoon, up 0.58%, equal weighted, even better, up 1.24. This speaks to the breadth. NASDAQ 100 up 0.3, equal weighted, up 0.84, again, indication of the breadth strength. Dow up 0.9, mid caps up 1.8, Russell 2000 up 2.45, Global 6040 up 0.52. In-house GROTECTION, some of our leaders lagged today, up only 0.2%. Let's get to the charts. We'll start off with the S&P 500. You can see a reclaim of that 5,000 level. Second day back above the 8-day exponential moving average. Let's see. New all-time high close, not new all-time high, but all-time high close. And again, up 0.58% while the big tech lagged. That just, again, indicates the nice job that the broadening of the sectors is doing. And you can see RSP equal weighted here, regaining all of the lost ground from that Tuesday gap down as well. NASDAQ 100 close above the 8-day, still not back to where we were Monday and Friday, but good rebound nonetheless. Dow Jones Industrial Average, good day today, up 0.9, not quite back to all-time highs. Here's where we were primarily concerned on Tuesday. Concern no more, blowing past the highs of Monday with a second straight gap and go, and closing at the highs of the day. And small cap, same thing, gap, go, close at the highs. Not quite the highs reached from late December, but looking fantastic. I'm running out of superlatives to describe this rally, but that 2x4 we were waiting for came on Tuesday, but the wounds from it healed pretty quickly. Let's put it that way. Dollar down. In fact, this makes it a failed breakout above this little consolidation that we were in for 2 weeks. Not a completely failed breakdown, as we got to get back below that 104 level, which was the bottom of the range. But this is good news for the bulls. Also good news if you're stubbornly holding on to gold stocks, but that's a different story. The VIX, second close back below the 15 level, still above the 21-day moving average, but nice move back down for the VIX. Bitcoin gapped up again today, but reversed, closed basically flat, hitting this 25 level. This has been a 20% run here from 20 to 25 over the last 2 weeks. So certainly 25% run, but certainly due to take a break. Broad bonds up 0.28%. Second day of a rebound after that big gap down on CPI. Long bond second day up after that move down on bonds. And if bond prices were higher, that means yields were coming off a little bit. We got back into the top of this base. So basically, let's call it a pullback to the pivot, not a failed breakout yet on yields. That's TYX, TNX. Back to the top of the base as well, and then bouncing. Let's look at the 5-year, as this was strong too. Not quite back to the top of the base. We'll look at GLD just because we do. Gap up with the weakness on the dollar, and GDX had a good day, but still looks like garbage. Up 2.92% on the day. That's our inter-asset correlation. Let's go to the tail of the tape. So some news before the open. Jobless claims slightly below. Retail sales were much weaker than expected. That's good news if you're looking for a rate cut. But that inflation data, CPI on Tuesday, that caused a problem. We've got producer price fresh data coming in Friday morning, so we'll be keeping a close eye on that to see if that shows the inflation that reclaimed, or that showed its ugly head back in CPI. See if the PPI shows the same thing. But again, stocks have totally shaken off that weakness over the last 2 days. Day count, second day up, second day above the 8-day exponential moving average, 29th day above the 21-day moving average. As far as sectors go, 10 of 11 of the spider sectors positive, led by oils, gold stocks, regional banks, biotech to the downside, tech sectors, and the dollar, semiconductors, software, and XLK, as both Apple and Microsoft were negative. Portfolio in-house, we bought 2 more starter positions in names that are related to the AI data center build-out, VRT and COHR, raising our beta from 0.99 to 1.08. We've got some focus names that are earnings related that we're going to take a look at, or news related that we're going to take a look at when we get to the charts, as well as a trip through the portfolio. But the bottom line on the day, second straight strong day with breadth after Tuesday's CPI sell-off. We'll see what PPI brings us Friday morning. Okay, let's go for a run through the portfolio, starting from largest to smallest. Uber continues to just be a beast, clearing that 80 level. NVIDIA was one of our big holdings that pulled back today, but certainly entitled to, and still above the 8-day exponential moving average. Third biggest holding, CrowdStrike, pulled back also, again near all-time highs, certainly entitled to do that. AMD as well, pulling back. If it gets above that 180 level with volume, it could take off. You can see how light the volume's been while it's been consolidating after heavy volume on this move up. Also heavy volume while it shook out after earnings, which were, I guess, a mild disappointment if you were looking for a blowout like NVIDIA had been presenting. Datadog not doing what we bought it for, close below the 8-day exponential moving average, having problems getting above that 137-ish level. Giving it some room though. Now to the smaller positions, Lilly, tight close today, and then the 2 new positions, COHR, earnings gap up, pull back to the top of that base on below average volume today, decent low risk entry point, and VRT, another data center name, pulled back to the 8-day exponential moving average after a big shakeout on Tuesday. Some names of note, Tesla, I've said it reclaimed the 200 level, also the 21-day moving average, which it had been below for about 6 or 7 weeks. SMCI, talk now that this is a climax top today, with it being at the 1,000 level. After hours, all the way up to 128 at what got as high as 1040. Also after hours, some good reactions. Coinbase up 12%. The trade desk, we hadn't talked about this for a while, as it had been forming a base, but definitely going to break below this declining chops trend line and right at the top of this base now, near 90, up 18.6% after hours. Applied Materials was already running. It's up higher now, crossing 210, up 12% in the right sector, semiconductor equipment. DraftKings down 1%. It was as low as 40, so coming back a little bit. They did announce an acquisition. Note a lot of accumulation recently since this gap up here. Maybe time for it to pull back or go sideways a little bit. We'll see how that reacts tomorrow. And on the downside, Roku down 14% after reporting earnings, so not so good there. That's going to wrap it. As always, like to hear from you. Email is don@revereasset.com. The phone is 855-REAL-WEALTH. That's 855-732-5932. If you're interested in becoming a client, email my partner, Dan Stewart, dan@revereasset.com. Our flagship portfolio is named GROTECTION because we serves a dual purpose: growing assets during uptrends, protecting them during downtrends. We don't sit like a deer in the headlights and say, think long term. Especially if you're close to retirement, you can't afford a huge drawdown. Maybe I need to bring back the drawdown table, but just a fantastic run we've been on for over 3 months. This is textbook bull market action, starting with an O'Neill follow-through day. Leaders plentiful, leading the way higher, outperforming the indexes by a factor of 2. Those are the stocks that we look for, and it's been nice to get a market like this after the 2022 bear, 2023 choppy recovery, to see a nice strong uptrend like this. And with that, I'll wrap up the video for Thursday, February 15th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.